Good morning, everyone. Steve here from theturtlefollower.com, and this is your stock market outlook video for Sunday, November 8th, 2015. Hope everyone had a great week. I was trying to get back into the swing of things. Being on vacation last week, a lot of things got pushed off, so I apologize for not getting a lot of videos out last week, but here we are. Nothing's really changed in the last week, let's put it that way. So here we are looking at the S&P 500 futures, and you can see that we came up to this 2110 area, pulled back, and are now looking like maybe we're doing one of two things. Maybe we're putting in a small bear flag. Maybe we're testing this trend line right through here. Either way, I think this is bullish. The fact is we haven't really pulled back from these highs as we have so many times in the past. You can see here, when we hit this back in May, quickly had a substantial pullback. Again, hit the area in June, pullback. Hit the area again in July, not even a day or two there, pullback. This to me is very controlled. Okay, we're closing basically at the opens each day. So we're having some intraday movement, but ultimately the price level that we're closing at is right here. Okay, so look at the closes. You have the close here on the 2nd, you have the close here on the 4th, the 5th, and then the 6th, all in this very tight range right around 20.95. All right, so that's a key level as far as I'm concerned. If we start closing below 20.95, things then start to change, but I think everybody's kind of positioning themselves for what looks to be a very controlled pullback and a bounce higher. So if we take out this high here, which is, let's see, what's this high? 20.99. All right, so take out 20.99, get a close above 20.99. I would say we probably at least test this 21.10, and probably, if not, break out from this level. Okay, break out of these highs, which is unbelievable, honestly. I mean, look at the run we've had. Unfortunately, with the way my system works, we were a little bit behind the curve here, just because we weren't really adding as many bullish positions as we should have been down here, just because of the price action. We're not seeing a lot of breakouts. Instead, we're seeing a lot of short covering here, which is a lot of the oversold stocks. All right, they're starting to bounce, and then all of a sudden our stocks that we're looking for are starting to move. So we've been in a good run, but we haven't picked up as much of the market. In fact, we've underperformed the market on this run, and that's one of the downsides of having a system that sells on the way down and buys on the way up. I mean, it's just the nature of the beast. But either way, I think on the S&P futures, if we take out 2100 and start closing above that, then I would say without a doubt we test 2110 and most likely break out. All right, but those are your two levels, 2100 and 20.95. All right, so just keep those in mind. And the reason I think we break out, if you take a look at the NQs, they've already broken out. All right, the NQs, they've already come into their highs. All right, here were their highs, and they've broken out. And in fact, on Friday, we even tested the backside of those highs at 46.60. So similar situation. I just, again, for that reason and that reason only, I think that we ultimately will break out of this range and start putting in a little bit of a fourth quarter rally, a little Santa Claus rally, as they like to call it, and really just trade higher throughout the rest of the year. I think without a doubt the lows are in, and I mean, looking back, like we've talked many times before, if you go back and look at 2011, let's even go back on this chart, 5 years weekly chart, and go back to the ES. All right, if you look back at what happened in 2011, we had the same breakdown. Okay, we had a little bit of a consolidation below the 200-day moving average. We traded decisively higher, and really that marked the low for the next 5 years. Now, whether that happens or not, I don't know, but the similarities between these two pullbacks are very evident, and almost too good to too much of a coincidence to really be true. But we'll see what happens. Here again is the trend line that we had, and we came right into that trend line. All right, so again, I think that this just breaks out, and maybe we have a slight pullback back into like 2052, 2030. Put in a higher high, because obviously we can't go to the moon. All right, right now the way this is looking, we're going straight up on the weekly chart, so that has to have a little bit of a pause at some point. But maybe we have a little bit of a pullback back to like 2040, which would be these lows here from the consolidation, right before we broke down. So maybe that's what happens. Maybe we do this, we pull back, and then all of a sudden you have this big inverse head and shoulders pattern that takes us higher. So but again, that's just one thing I'm looking at on the ES. Right? As I said, the NQs have already broken out. The Dow futures, okay, they're also testing their highs. You can see we're back above the 200-day moving average. All right, we're back up to this 18,300. All right, and again, looking at it on the weekly chart, on the daily chart, which is very controlled, and even this closed higher on Friday, whereas the S&P closed on a bit of a doji. All right, but again, look at where we've closed. All right, all those ranges are right in this. Oops, wrong tool. All of those closes are right in this tight range. All right, so really between 17,850 and 17,800. All right, so that's a key area now. As far as short-term traders, you have to understand that the way short-term traders look at it, those are key areas. And with these two candles, all right, right here, pulling back, moving higher, pulling back, moving higher, I would say you have a pretty key support area right here at 17,703. All right, so that would be a level I would trade against if you're a short-term trader. The Russell outperforming the S&P this week. The IWM moved higher. You can see here we are with the Russell trading back above this level that we discussed, 1190. All right, the Russell does have its 200-day moving average at 1215, so that's slightly higher. Okay, 1215, which is right about here. Okay, so there's the 200-day moving average. All right, so that'll prove to be a little bit of resistance as well. The bottom side of these pullbacks, okay, right in here. So that this is a key area, because you can see now as you start to look at this, you have a couple different areas. Let's remove this big. You have that area right there that mark the highs. This area mark the lows. Mark the lows. All right. Tried to bounce there, it couldn't. All right, and also now we have 200-day is right above us. All right, so I would say that this is an area that is extremely important to the Russell, this 1215 area. So we'll get a little breakout. Let's see how we react at 1215. All right, and then see where we go from there. But just know the Russell is breaking out. You can see the 4-day pattern that it had, or 3-day pattern, sideways, right below consolidation, right below resistance. All right, and then we had this breakout on Friday. So I would expect this to trade 1215, and then maybe see a little bit of resistance there. So just to recap what we're looking for, if we take a look back at the ES, because that's the main one we concentrate on, I'm expecting to see this coming week a move over 2100, all right, a test of 2113, and then ultimately a breakout of that level. All right, so that's what I'm really looking for this week, and that would probably be off the table if we took out these lows here at 2077 and closed below 2095 that we talked about. Okay, so that's really what we're looking for. 2095 is the key point. We may trade below it, but if we close below it, it's a different story. If we start trading below 2077, then maybe this is a bigger pullback than we originally thought. Maybe we already tested the highs. Maybe then we pull back to this 2040 area. All right, and then get some steam to break out. Because don't forget, think about the amount of buyers it takes to get us from here down all the way down at the bottom at 1865, which, you know, we talked about a swing trade there in the SPY that ultimately we wish we still had. Took it off right here and around this 2112 area because we saw this slight reversal. All right, but ultimately it just continued higher. So right now, again, just think about the amount of buyers it takes to get us from 1860 all the way up to 2100, and we'll see how it reacts. But I think at this point we're extremely overbought. I think we need a little bit of a pause, and that pause doesn't necessarily have to mean a pullback. It can very easily mean some sideways consolidation, which would be exceptional in this area if we really just consolidated in this larger range right here. Maybe for another couple weeks and really put in a solid base before moving higher. I think that would be great for the overall health of the market, and even a pullback would be fine as well. But it's a lot harder to get in on a pullback than it is a consolidation. But that's where I think we're headed. I mean, like I said, I think ultimately we probably break out. I think the market's extremely bullish right now. Looking back at 2011, you could see that we basically consolidated and then ultimately just continued to move higher for the next 4 years. So, at this point, I think that's similar to where we are now. But we have to see how it all plays out. So that's it for this weekend update, or I'm sorry, this stock market outlook video. If you have any questions or comments, let me know. Take care.